San Francisco's troubled office market. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of Heise Says US. Grab your stein of coffee and let's have a look at this article from Bloomberg. So, the office market in San Francisco is even worse than New York. San Francisco is expected to have the worst performing office market in the US this year. And I wonder how that's going to affect the real estate investment trusts that are focusing on the office market. There's been a lot of talk that, well, returning to work in the office now that we've adapted to working from home may result in a decline in the demand for office space. If you're paying the insane rents for some of these commercial spaces, I don't blame you for wanting to cut back. And working from home has a lot of perks. Rent and occupancy will likely drop 22% in San Francisco in 2021, the largest decline in the US, as technology companies embrace remote work, according to a report by Green Street. The second biggest drop, at 17%, will be New York, where office towers have been largely empty for months as finance firms ride out the pandemic with most of their employees at home. San Francisco and New York will likely see a permanent resetting of rents as people and businesses look more towards the middle of the country for expansion, said Danny Ismail, an analyst at Green Street. It's unlikely that rents and occupancy will return to a level pre-COVID over the next few years. San Francisco and New York, longtime hubs for tech and finance companies, have been hit especially hard by the pandemic as tenants try to cut costs. They're reevaluating how much space they need and looking to cheaper states to open offices. Some cities are benefiting from the migration. Nashville, Tennessee, Charlotte, North Carolina, Austin, Texas, and Atlanta are each expected to post slight growth in rental and occupancy, according to Green Street. Overall demand for office space in the US is expected to fall by roughly 15% through to 2025 due to growing work-from-home trends, Green Street said. So there we have it, everyone. San Francisco office market crashing by down to 22%. That's a big chunk, over a fifth. As more and more of these businesses work from home. So they reduce, it's brilliant. They reduce their footprint costs, their lettable costs, because they don't need as much area. Then people can work from home. People use their power from home. People use the air conditioning from home. People probably also have better quality of life. Now, if you can get a job with Facebook or one of the big companies and then move to a state where you don't have to pay as much income tax and where you can get housing dirt cheap. Sounds like a pretty sweet deal. But then again, you could also offshore the work too. As always, guys, let me know your thoughts and opinions in the comments down below. Do you think this will affect any of the real estate investment trusts that you are invested in? Or are you looking at other states? As always, guys, if you're a fan of the channel and want to support the content I cobble together here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Aussie Broadband. You can buy merch from Heise Says, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time. Bye for now.